So now let's talk about sales discount account. This is also a contra revenue account. It's the opposite of sales. And a sales discount is when I offer a cash discount to my customer for them to pay me early. This helps me bring money in, and it normally always has a debit balance. And so when I talk about offering a sales discount, I'm going to offer them what we call credit terms. These are very typical credit terms, and here's how this is read. 2% 10, net 30. What this means is I will give you a 2% discount off of the sales price if you pay me in 10 days. Otherwise, the whole amount is due in 30 days. Now, why would I do this is because it will allow me to get cash in 10 days instead of waiting for them to pay me in 30 days, because 30 days is normally the standard credit period time. So here's examples of different terms. 1% 10, net 30. It's the same as this, except you only get a 1% discount instead of 2. 2 EOM, net 60 means you can take a 2% discount if you pay before the end of the month. Otherwise, the whole amount is due in 60 days. So you just need to pay attention here. This one is 310 EOM, net 60. So this means 3% discount if you pay within 10 days after the end of the month. Otherwise, pay the whole amount in 60. So you just have to understand, standard credit terms are these up here. This is the most standard one offered, but it does depend on the industry that you're in. So when I offer sales, so when a customer takes this discount, it's called a sales discount. And let's look at the journal entry. First of all, I can only have a sales discount for credit sales. It does not apply to a cash sales. So in this case, if I sold merchandise for $100 with credit terms, 2% 10, net 30, and cash is received within the discount period, here's what would happen. So this is the journal entry for the sale. I'm going to debit accounts receivable, credit sales for $100. But they only send me $98 because they take a 2%. So here's the journal entry. I debit cash for $98. I debit the sales account for the amount taken, but I have to credit the accounts receivable for the full amount because they do not owe me the $2, and I need to wipe the $100 off of the books. So this is how to do the journal entry when I sell, when I collect the money. So next, let's take a look at the accounts receivable ledger. Okay, and here are some journal entries, and we're going to look at these journal entries. April 4th, my sale on account. So on account means accounts receivable. To this customer, $15.20 plus $76 sales tax. We're going to look at that. This is to Brenda, $4.40 plus $22 sales tax. $9.80 plus sales tax, $6.20 plus sales tax, and $1,600 plus sales tax. So here's how these journal entries actually look. All of them are going to debit accounts receivable for the full amount of the sales and the sales tax. I will be crediting sales because really my revenue is only the actual sales, not the tax. And then once I do this, I will be posting them to general ledgers. And we already have talked about how to do a general ledger, so this is just instructions. We don't need to really go over them. But here is the general ledger. So basically, accounts receivable will go into here, and then my sales tax payable will go into here. And this is my actual sales account. So I'll be posting, I always post journal entries into ledger accounts. So this concludes video number 3, which talks about how to journalize sales with tax, chapter 10.